Alright, thank you for tuning in to another edition of the Vulcan Report. Right now we're looking at a chart of gold spot prices. As of yesterday's close, we closed up $2.16, up 0.18%. Prices closed higher than they opened, with strong bids going into the close. We have a pulse scan reading of negative 26.49. Although that reading is still negative, we are still well into an uptrend channel, which occurred as of one period ago. The last signal that we had was an overbought sell 59 periods ago. And the last swing VIX signal, since we had one, the gold spot price has increased 0.18% and has ranged from a high of $1,190.22 an ounce to a low of $1,165.11 an ounce. As for momentum, we still don't have any yet. Currently the trend is blank, meaning that there's currently no trend reading at this time, and there's currently no trend strength reading at this time because it doesn't exist. As far as retracements go, we're still in bullish territory as long as this gold price can remain above 1,097.42. As of yesterday's rally, we managed to close above the short-term trend line support of 1180. We need to stay above 1180 in order to build support for the next push to get us above the 1197 mark. So 1197.30 is the next resistance target that gold is going to need to close above. Okay, intraday resistance for Tuesday's trading, we have resistance at 1186.68, and we have support at 1178.04. We do expect that the upward resistance will be violated, but we still see prices trading within that range for Tuesday. No real breakouts that we see to speak of. As far as our weekly support and resistance, the weekly resistance is still at 1203.85 and support is at 1156.92. What that means is gold could collapse back down to 1156.92 and still be well within its support and build a bullish position. That's how much fluff we have in the market. Okay, but before we can say the market is ready to start trending on a bullish level, we do need to see the market break out above 1203.85 for the week. Okay. As for volatility, we closed above the lower band by 37.4%. This combined with the steep downward trend suggests that the downward trend in prices has a good chance of continuing. However, a short-term pullback inside the bands is likely, meaning continued retracement off of the lows, okay, that we had back here on July 28th. All right, so that's really all that means. Excuse me. Let's take a look at silver real quick. All right, taking a look here at the silver market. Yesterday we closed up 40 cents, up 2.23%. Prices closed higher than they opened, with strong bids going into the close. We have a pulse scan reading of negative 10.37. However, the pulse scan is in an uptrend channel as of Monday's close. So that means that positive momentum has entered into the market. So we expect sideways to higher prices within the next 3 to 5 days. Excuse me. The securities price has set a new 14-period high, while the swing VIX has not. So this is a bearish divergence. Since the pulse scan leads the market 3 to 5 days out, we will wait to see if downside pressure develops. Since the last swing VIX signal, the silver spot's price has been unchanged, and it's ranged from a high of $18.54 to a low of $17.94. There's currently no trend reading at this time, and there's currently no trend strength reading at this time. As far as retracements, there are none to speak of, with the exception of Monday's close. That rally pushed prices on the close above the short-term trend line support area of $17.92. We're going to need to stay above that if we're going to have any hope of seeing any further rally ensue in the silver market. In addition to that, we closed above the below the upper band by 10.1%. So that suggests that the downward trend in prices has a good chance of continuing. with the exception of any short-term pullbacks off the key support levels. So we'll have to wait and see. Again, gold and silver still not trending right now. Not a whole lot of opportunity to speak of just yet in that market. Regardless of what you hear the talking heads and pundits say on television, not a lot to speak about right now in these markets. All right, let's take a look at the Dow real quick. As of Monday, the Dow closed up 208.43, up 1.99%. Prices closed higher than they opened, with strong bids going into the close, and it's generally considered bullish as prices close significantly higher than they open. If this candle appears when prices are low, it may be the first sign of a bottom. If it occurs when prices are rebounding off of a support area, the long white candle adds credibility to the support. Similarly, if the candle appears during a breakout above a resistance area, the long white candle adds credibility to the breakout. And this is your long candle right here. So for all intents and purposes, we should be putting in support above this higher end of the Kumo band. So we'll wait and see. As for market sentiment, we have a pulse scan reading of 37.36. So we're trading above the signal line. However, we remain in a downtrend channel as of one period ago. All right. The securities price has set a new 14-period high, while the swing VIX has not. This is a bearish divergence. Since the pulse scan leads the market 3 to 5 days out, we will wait to see if downside pressure develops. Since the last swing VIX signal, the Dow Jones Industrial Average price has increased 1.99% and has ranged from a high of 10,692.20 to a low of 10,347.50. All right. Currently, the uptrend is still intact, with prices holding above trendline support at 10,255.55. As for trend strength, it's weak and range bound. Prices have ceased trending and have become consolidated at this time. The market has put in a short-term top. This means that the bulls are liquidating long positions, thus taking some profit off the table, which they have been doing for some time. And bears have also been adding to this retracement by liquidating short positions. As for trendline retracements, none to speak of at the moment. However, our intraday price projections for Tuesday, we have resistance at 10,641.88. We do not anticipate that will be violated. Support we have at 10,518.90. That is in danger of high probability of being violated. As for our weekly price projections, we have resistance at 10,584.99 and support at 10,347.50. There's a high probability that we will trade within that range and not break out or break down above or below that this week. We'll have to wait and see. Monthly price projections are as follows. If the bull market resumes, which is looking like it wants to try to do, our 12 to 18 month price target for the Dow Jones is 13,262.91. Our long-term trendline resistance is currently at 11,258, and our long-term trendline support is currently at 10,255.55. All things being equal, if a bull market does develop, our bubble phase 1 bull market hyperparabolic circuit breakers come into effect. 24 to 36 months out, the price target is 15,267.83. Our bubble phase 2 price target is 17,272.74, and our bubble phase 3 is at 19,277.65. Do not think for one moment that that cannot happen. If they want it to happen, that's exactly what will happen. Don't ever forget that. As for volatility, we closed below the upper band by 5.4%. This, combined with the steep uptrend, suggests that the upward trend in prices has a good chance of continuing. However, a short-term pullback inside the bands is likely. We do have a warning for Tuesday's trading. That warning is a possible upper volatility band breakout with bullish momentum strengthening into a phase 1. That will be a long entry. You want to buy at 10,703.37. Initial profit target 11,506.16 with a stop loss at 10,457.50. 40. No short positions for this security are in play at this time. That's all we got. Remember, take what you can, give nothing back.